Welcome to the Bet Out of That show. Have Patrick Doherty in the house. Today we're going to have an interesting show. We're going to talk about Shark Tank. Kevin O'Leary is caught up in an alleged scandal. And Patrick, you have an interest in a particular stock. What are you going to talk about today?
I'm going to talk about DocuSign.
Are you sure, Patrick?
I am sure. It just released earnings that were blockbuster.
All right, I'm going to be bringing the heat, so let's start the show.
Okay.
A beautiful Sunday morning in Seattle. It is time to talk about something that I can't believe, Patrick. Say it ain't so. Kevin O'Leary from Shark Tank is caught in a scandal.
Yes, he is.
I can't believe that, man. Are you serious? Kevin O'Leary
Yes.
is caught
Yeah.
in a scandal.
Yeah, the complaint was filed Wednesday, and 20 plaintiffs across the country claimed that they were lured by involvement, endorsement, and credibility.
Yeah, let me look into that. I want to go through that a little bit. Miss Jams, welcome. Miss Jams is in the building. My folks are in the building. So let me go into this a little bit, Patrick, here with this Kevin O'Leary thing. I'm going to share my screen. But what I'm going to do is, Patrick, because you're coming in through Zoom, you cannot see what I'm seeing, but our YouTube audience can see it. So
Okay.
I'm going to go through this.
Right.
Shark Tank star Kevin O'Leary and former star Kevin Harrington are facing allegations of fraud.
Yes.
Can you believe that?
That is unbelievable.
In a lawsuit filed by 20 people from across the country, the two famous business investors have been accused of scamming and manipulating hopeful entrepreneurs. ET, which is Entertainment Tonight, this is where the article is coming from, has reached out to Harrington and O'Leary for comments. According to court documents obtained by ET, O'Leary and Harrington are accused of working together to defraud people from the alleged use of fictional executives, false promises of financial success, and even the illusion of being on the show. Specifically, the two allegedly employed a predatory fraud scheme to induce investors and entrepreneurs to hire one of two companies, and those two company names are hard to pronounce. The entrepreneurs claimed that they were promised that they would receive help from crowdfunding to start their businesses if they invested financial resources into them. After the entrepreneurs paid these two companies, they claimed that they didn't receive any help that they were promised.
Hell no, to the no, 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 hell to the no, hell to the no, to the no,
Unbelievable.
no, no, hell no, no.
Can't believe it, man. Say it
Yes.
ain't so. So here's the point. The point is, Patrick, is that on the Bet Out of That show, what we try to do is teach people how to fish, and we we teach you to invest for yourself so that you can start your own business. You can fund yourself. You can go ask people questions, but our goal is overall to show you how to fish and invest for yourself so that you can make money, generational wealth, as well as, have enough money to start your own business. Case in point, my e-bike business in Lake Forest Park that I recently invested in. So I thought that was pretty funny. I thought I would start the show with a fraud alert on, investing. So what do you have to say about that, Patrick?
Yes. So things are not always as they seem. You could revere someone who has a quote unquote storied past, and then you just never know. If you look underneath the hood, they may be caught up in some kind of scandal. Things are not as they seem. Another case in point, Donald Trump was considered to be this invincible businessman in the 1980s and the early 90s, but then his casino empire kind of fell apart. And then as time moved on, Donald Trump got involved in all these lawsuits. Trump University was a failure. Trump Steaks was a failure. All these other failures. And people lost their money and lost whatever investment they had.
And then when he became president, you know what a lot of people said?
What a lot of people say.
To the no, no, no. Hell to the no. Hell to the no. To the no, no, no.
That's what a lot of people said. Not all people. But let's keep it moving, Patrick. So, with that said, investing for yourself, I know you are really excited about a particular stock. And that stock would be what, Mr. Doherty, our accountant?
It is DocuSign.
So,
Ticker symbol DOCU.
Yeah, so you're big on DocuSign. I am not so big on DocuSign. I am big on DocuSign's. I'm big on their competitor. Who is their biggest competitor?
One of the biggest competitors is Adobe.
Ooh, Patrick, you make my spine tingle in a investing way. Yeah, I like Adobe. So, but you like DocuSign. I do like DocuSign for a long-term play. I do see some headwinds. So I would like for you to go into DocuSign, and I went off on YouTube and listened to some people talk about DocuSign. They're really, really bullish on that particular stock. And then I did my own analysis and I went, this does not completely pass the Troy Johnson test, but certainly I do understand why people would be enamored by this particular stock. So Patrick, without further ado, let's get into DocuSign and let's get into the bullish case, meaning the case of why we will want to invest, buy. Let's get into the bullish case for DocuSign.
Okay. So first of all, let me share my screen. Just want to talk about how DocuSign just completely blew away the earnings this last quarter. 1 second. So, from an investment service called Seeking Alpha, DocuSign has announced their earnings on Thursday, which is September 2nd. The quarterly EPS actual, the earnings that were just released, reported at 47 cents a share. So that's a beat by 7 cents a share, where the forecast was 40 cents a share. The revenue, the actual revenue for the quarter is a little less than 512 million. So that was beaten. So that beat the estimate by about 24 million of about roughly 486 million. And I just want to go over the highlights of the quarter. And this is from the DocuSign press release of the conference call.
Yeah, and I noticed that you are on investor.docusign.com. We recently talked about how do you find the earnings release for any company. So
yeah, so anytime you want to get a financial information, stock information, often you can get links for the SEC 10Ks, which would be the annual report submitted to the SEC, or the 10Qs submitted to the SEC, which would be on a quarterly basis. You go to the investor relations on a publicly listed company.
Yeah.
And that's critical for investors to do.
For sure. Let's keep it moving, Mr. Durante.
Yes. So these are the second quarter highlights right here. I'm just going to blow this up a bit. It might be a little bit hard to read for some.
Yeah, I appreciate that. Thank you for blowing that up, my friend.
Okay. So hopefully that's legible right now. So the revenue was 500 and so just short of 512 million. That was reported, and year-over-year performance, that's 50%. And most of that came on a subscription revenue from their enterprise business of 493 million, which is also an increase of around 50%, 52% here. Professional services and other revenue amounted to just over 19 million, an increase of 3% year over year. Billings were 5.5 million, an increase of 47%. And the gross margin, which is very important, that means you have pricing control of your product. That was 78% compared to 74% in the same period. And GAAP net loss per basic and diluted was 13 cents a share.
Hold on, Patrick. Did you say net loss?
Hell no, to the no, no, no. Hell to the no, hell to the no, to the no, no, no.
I don't like companies that lose money, Patrick. That's going to be one of my rubs right there. But continue.
Okay, and then that's compared to 35 cents from the previous year, and the cash flow, which is to me more important than the net income, was 178 million as compared to 118 million. So the free cash flow was 162 million, we can say, compared to just 100 million the same period last year. And
That's good. That's good.
The trajectory of the trends seem to be very, very positive for the stock.
All right, Patrick. All right, come out for a second, Patrick.
Yes, and I shall do that.
Now come and talk to your investor friend for the last 25 years, Mr. Troy Johnson here. So DocuSign, great quarterly earnings, they were trading sideways for quite a bit.
Yes.
And then now they're breaking out
Yes.
of that sideways trend. And when you build a base trading sideways, as we know, that's a bullish pattern to break out, right?
And I'll show the chart later on.
Yes. So I get that. Their technology is the CLM technology, which they're known for. I just did some investigation in preparation for going head to head with Mr. Patrick Doherty. So that CLM technology that DocuSign is just a leader of is contract lifecycle management. And so it's really about putting all of these contracts on a server in the cloud, essentially. And you can do everything virtually, and you can check people better. So when you sign documents with a pen or paper, someone can have fake ID or whatever. Because everything is electronic, you can really go check people's background. You actually have more security electronically than you do paper signing, which I wasn't aware of. And you have contract life cycle management, meaning as the contract needs to be signed by different people, these algorithms, the IP, not the IP, but I'm trying to say it, but the intelligence, the AI is what I'm trying to say, will check to make sure everyone's signed by a specific time. And so it can do all of that. And then on top of that, the lifecycle management software, when expiration comes up for a contract, it will notify everybody, hey, the contract is good for 5 years, so we're within 30 days, 60 days. These people, so it's really an AI technology that saves everyone time. You can search for particular items, and they're the leader in that space. They're just killing it in that space. They own more than 70% of market share. So their competitor, Adobe, is not even close right now. So I just wanted to throw that out there, Patrick, that there's a real big bull case for the upside. And what else is good about DocuSign as well is that most companies like that type of company would just go after the enterprise space, meaning the big businesses. But DocuSign even has templates for the mom and pop, 1 employee, 2 employee, no employee. So DocuSign makes contracts for everyone, which is pretty impressive. And then lastly, what's great about DocuSign is they are expanding into the foreign space. So they're expanding in Germany and Australia and Japan. And Japan has these special characters and stuff that you have to do when you're signing documents. And DocuSign is building all of that in. So they have that, that intellectual property and that lead. It's similar to how Netflix jumped out there in the streaming space. And, all of the other guys and gals are trying to catch Netflix, but Netflix has such a big lead. And like Amazon stepped out there, DocuSign is that company. And they're laser focused on putting contracts online and making it easy for not just big business, but for everyone. So it's a really, really bullish case, a very bullish case for DocuSign, the business. So what are your thoughts on that, Patrick?
Yeah, precisely. And another thing is that the business that they're in, still it's only 10% of companies are using something like DocuSign.
Yeah.
So there's unlimited upside. And another thing is, yeah, sure, much of their business has expanded through the pandemic. But however, before the pandemic, the business was strong. And so I think being able to sign a document on your cell phone, because I know I've used DocuSign to sign the the closing costs on real estate, to sign to have a tenant sign a lease
Yeah.
on one of my rentals. I've used DocuSign. I mean, I think it's a fabulous business model and a fabulous product.
Yeah.
And you can just go through a contract very quickly. And all you do is kind of you just go click, 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 or tap, 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 tap on your PDA or iPhone or iPad or whatever phone that you're using.
Yeah, when I was looking at the earnings, I went to the investor relations and looked at the transcript. I did not listen to the call. I just went through the transcript, and they gave an example of how a pro football player, I think it was a pro football player, let's say a pro athlete, went through DocuSign and was signing his multi-million-dollar contract on his phone in a fast food restaurant parking lot. So, the technology is incredible. It's great. Miss Jam said that's how she purchased her house as well, kind of corroborating what you're saying, Patrick. So, Patrick, let's look at the stock. How do we know that a stock, what is our first litmus test to know a stock is a growth stock and it's investable? We look at something called an exponential 200-day moving average to see if DocuSign is consistently above it. Can we look at the exponential 200-day moving average and see if, number one, DocuSign passes that test?
Yeah, why don't we go there now? So let's start sharing the content.
And then I said all of these beautiful things about DocuSign, right? But then I'm going to bring out the haterade. I'm going to bring out some of the
hell no to the no.
Everything is not beautiful with DocuSign from my perspective, but certainly long term, man. You know, if you're going to be a long-term investor and just sprinkle some money in there and be prepared for a fall to get more, be prepared for the stock price to fall and get more, then I'm more DocuSign for that. But I do see some challenges ahead for DocuSign. But let's do the first litmus test. Anytime we look at a stock, this is the first thing we do to see if it's investable.
Yes. So we'll look at the 5-year chart.
Yep. So we go 5 years. And DocuSign has only been on the market since the stock exchange since 2018. So it actually does not go back 5 years. But you can hit the 5-year chart. It will show still the study. It will still show where it's been doing over the last 3 years.
Exponential.
Right? Yeah, exponential move. Change that period to 200, please. And hit add. And we are on barchart.com, our fave.
Oops. So
let's go. Is that study in there? Did you? I think you clicked out and you didn't put it there. Click on study, please, again, Patrick. Yeah. All right. And you got an estimate. You got a 3 there. What's the 3 for? You did some.
Oh, I don't know why this said envelope.
Will you delete that? Let's just use the default. Yeah, please. Thank you, sir. Let's go moving average for those who do not know how to add exponential moving average.
Oh, I hit envelope by mistake. I apologize.
Okay. Yeah, just use and then change that to 200. Use the default settings, but change the period to 200. And boom. Pull it up. All right,
so
Patrick.
that's on a 1 year.
It's on a 1 year chart. It's 2 years. 2 year. Let's go 3 year because the company has only been out since 2018 on the exchange.
Okay, you can't really do the 3 years so much.
Show you. So do 2 year.
We'll do the 2 year.
All right. So, number one, it touches the 200-day moving average. That's fine, and it bounces off. kind of penetrates a little bit, but
Yeah,
it's
right
consistently
here.
staying above the exponential 200-day moving average. So I would say this stock is investable for the long term. So it passed test number one.
Yes.
And as far as the technical charts are concerned. All right.
Yes.
So Patrick, come back to me, please.
Okay. I'm here.
So now, what are you about to show us now? What other evidence you're going to show before I start to show some of my concerns, which we call headwinds, in the investing technical space we call, concerns, headwinds. So before I go into my headwinds, let's go with more of your tailwinds, your catalyst for upward mobility that you have.
So what I'll do is I'll take a look at another chart through Investors Business Daily's MarketSmith. And for those who don't know what MarketSmith is, it's a comprehensive screener and stock analysis tool that is essentially the best of the best that Investor Business Daily uses. So you can scan charts based on various fundamental criteria, technical criteria, or what a guru may see as an investable stock. So I'll go through that right now.
Okay. Now, Patrick, you're touting this DocuSign stock. Are you putting your money where your mouth is?
I have.
Or are you just doing some? I'm on the Bet Out of Debt show, so I'm just going to talk about a stock type thing.
No, I've initiated a small position at around 310-ish.
Okay. So you're putting your money where your mouth is. Super. That's good to hear. All right.
So anyways, as
can you blow this up some, please, Patrick?
Yes.
Yeah, thank you, sir. For the smaller screens, you really got to blow it up for those phones, man. They come out really microscopic. All right, my friend. I think that's better. Let's do it.
So here, the stock was in this pattern for a few months. So this is kind of like a channel.
Yeah, it's going up and down between those two dotted lines. So it's trading what we call sideways.
Yes. And then
and consolidating.
It's consolidating. And then right now it did a breakout.
Very bullish chart sign.
Yes. So let me get this back to normal size. So this is on the weekly. Here's what it looks like on the daily. So again, you have this channel that essentially was established before January of this year, right here. And it essentially got broken out by, it started to creep upwards around July. And then it really broke out the last trading session, which is, well, the earnings release was on September 2nd. The last trading session was on September 3rd. It broke out very significantly from this pivot zone right here. So just so you know, this blue box represents the time in which you should be buying the stock. Down here represents a stop loss, which would be around 270. So if your analysis doesn't work out, or there was like a something bad that happens in the market and drags everything down, that should be your stop loss, is around 270. But if you look at the upticks, you can see that corresponds with higher volume.
Oh yeah,
right
look
here.
at the volume below. Look at those spikes on the
And then you have
volume.
and
Can you point to the
last
volume
trading
real
session.
explicitly, Patrick?
What's that?
Can you point to the volume very explicitly? Like,
Yeah, like here,
yeah. Well,
and you can
just kind
see.
of go up and down so you know. Yeah. Okay. All right.
So it's going up on strong volume. Another thing I like about the stock, let me see, is I like the fund ownership. Most of the ownership is through these mutual funds. Funds represent 52% of the ownership, banks 2%, but it's got strong institutional ownership.
And what's good about institutional ownership is they usually hold for a long period of time, and they usually are very smart. So if you get
That's the
institutional
smart money.
investing, then there's a lot of confidence. There's a level of confidence in the company, as well
Yes.
as liquidity. So that's a good thing.
Yes, and you can see the fund ownership is increasing steadily.
Oh, I see. Yeah, over time it's going from the past
Yeah.
at the top to the present, more the
Yes.
present at the bottom. Okay.
Yes, and if you were to take a look at the checklist here, William O'Neill, who is the founder of Investor Business Daily and a very successful investor, has essentially given it all pass on his checklist. EPS rating of over 80, our relative strength rating of over 80. Right here, the EPS is like 99, meaning that's EPS growth over last
Since
year.
you're over there, Patrick, will you blow that up a bit?
This?
Yep. Go to PE ratio. No. Go come down to the PE ratio right there.
Right here. Yes.
Hell no, to the no, 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 hell to the no.
Do not like that PE ratio, my friend. Do not like it in this environment at all. You're paying 196 times what the company earns.
Hell no, to the no, 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 hell to the no, hell to the no, to the no, 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 hell no,
Okay.
no.
So that's one area of concern. However, keep in mind that it's a stock that's coming out of the earnings that were negative. And even though the PE ratio might be a little bit high, this number is going to come down over time as the company grows its business.
Okay. Keep going over, Patrick. Okay. Go back over to your other side. I was just waiting for that PE, your retort on the
Yes.
big PE ratio.
And so you're looking at EPS, as I was indicating, and that's, if you let me collapse this here, the EPS is 176 as on a quarterly basis.
Yeah.
Over last year.
Yeah.
So that's definitely positive.
Yes. We'll get into some other things. Okay, Patrick, can we click out of this?
Yes. Oh, yeah. And one thing I wanted to show is that it's part of the Investor Business Daily's growth 250 stock. So let me go in here. Just kind of bear with me. Yep, here it is. So any stock that's part of the Investors Business 250 is considered to be a strong growth stock.
Yeah. You got a lot of potential upside. I mean, it has the document signing, cloud, digital signing on lock. I mean,
Yes,
they are the Netflix of streaming, the Amazon of retail or online retail.
And the fund ownership is 52% of the float.
Yeah.
And you have good mutual funds invested in it.
Click out of this, please, Patrick.
Yes, I was about to get out of this as well.
Okay. So, Patrick.
Yeah, 1 second. Yeah, go ahead.
Why isn't your neighborhood Seattle friend so excited about DocuSign at this particular moment?
Well, you think that it competes directly with Adobe.
Well, Adobe is trying to encroach on that space, but Adobe does way too much to ever do what DocuSign does, because DocuSign is specific to countries, to business sizes, to just contracts, and they invest a tremendous amount of R&D to keep that moat or that leadership, right? But here's some things to consider. Can I share my screen?
Yes.
I'm gonna just go over a couple of things here. So let me do this, Patrick. It's easier for me to just click over to my screen. You can't see my screen as well, but the audience can. It's easier for me to do this. So this is DocuSign. I have DocuSign up, Patrick.
Yes.
And I'm looking at Yahoo Finance in particular, and you can see that DocuSign has, done well over the last few days here. Had a breakout.
Yes.
If you just look at bar chart, the red line represents the 200-day. The 100-day is this yellowish color, but you can just see right here, DocuSign just took off right to the second deviation high of the Bollinger Band. But look, I want to go into the numbers here. One thing, a concern that I have, a couple of concerns. One is the forward PE. So the price to earnings, and we talk about this all the time. The price of a stock is essentially what the company earns per share, the EPS. And then the forward PE is called the multiple, or the trailing PE. The PE is called the multiple. That's how many times you're willing to pay above what the company earns. The forward PE on DocuSign is 185, currently 192 times earnings. And I did the sound effects earlier when you were showing the other charts. I will not do it again. But that's big in this environment, in this inflationary, deflationary environment. When inflation kicks in, when, if the economy starts to kind of freak out on inflationary concerns, this high multiple over the EPS, this company is going to be at risk. That's one headwind. Now let's look at Adobe in comparison, because Adobe doesn't do exactly, but Adobe has, a similar product where you can do signing and documents, and it's a pretty established company. Adobe forward PE, based on the EPS is projected to earn, it's only 43, Patrick. So its forward PE, based on its recent earnings, is 43 times what the company earns, where DocuSign is 185. So again, a lot of what you were saying, there's a lot of bullish sentiment around this company, but if the economy starts to slide, if people start getting concerned about inflation, guess who's not going to slide that much? Because it's only 43 times the earnings. Adobe is going to hang in there. Adobe may go down to 40 times earnings, the price of the stock, maybe 30 times earnings, the price of the stock. And so it's not going to get hit percentage as hard as a DocuSign, where you are paying 192 times earnings. So for this to come down to less than 100 times earnings, this price of this stock is really going to get hit. Now, long term, do I believe it's a good buy? Absolutely. But I think there may be an opportunity for this stock to pull back. It would be cheaper. Maybe you can get this stock at 100 times earnings or 75 times earnings versus buying it at 192 times earnings. That's number one. Okay, number two, let's look at the PEG ratio of DocuSign. The PEG ratio for DocuSign is 4.3, Patrick. 4.3. Do you know what Adobe, if I go to Adobe PEG ratio, is 2.5. So what is the PEG ratio? So typically when you're pricing a stock and what's affordable, typically you do not want to pay more than 1 to 2 times the growth rate. So if a company is growing at 20%, projected to grow at 20%, then you want to pay a PE ratio of around 20. So that would be a PEG ratio of 1. If it's growing at 40% and if the company is projected to grow at 40% and the PE ratio is 40, that's 1. So that's good. You're paying on par. Your PE ratio should be on par with the growth rate. When you pay a higher PE ratio, that means you're paying for instance, if the company is growing at 20%, but your PE ratio is 40. So it's twice as big as the growth rate. So that would be a PEG ratio of 2 and so forth, So that's a higher PEG ratio. That means it's more expensive. And Adobe, the lower the PEG ratio, the better. So I'm not really digging the PEG ratio as compared to Adobe. Adobe is only 2. For DocuSign, you're paying 4 times the growth rate. So that's a little scary to me. And then let's look at something else. The book value for DocuSign is 238 times book. And look at Adobe. 22 times book. So what's going to get hit the hardest if inflationary concerns come back? So Patrick, those are my thoughts there.
Okay.
And so what are your thoughts on that? Because those type of concerns really, in this environment where 1 minute we're not concerned about inflation, the next minute we are concerned about inflation, that's kind of scary to me.
Okay, let's talk about the PE ratio of what, 183?
Yeah, it was PE ratio. Let me go back. Yeah, it was 192.
Oh, 192.
Yeah.
So anyways, yes, this is fairly expensive. It has quite the run up. I would say that in the long run, yes, this stock has some great potential. I think what will happen is that the earnings will grow into that multiple and bring it down over time. Right now,
good point. Very good point.
Right now, however, you don't want to buy all. If you're interested in DocuSign, yeah, it's kind of expensive. Right now, you may buy it as a momentum play, as opposed to a long-term investment because of that metric. However, should the stock come back down some during whatever inflation concerns there may be, you might just want to buy just a little bit as it comes down. Just buy a little bit. Don't buy everything right now. Just because right now, I would agree, it's very risky. Even though you look at the chart and look at the fund ownership, right there, that's all positive. Things are beautiful.
Yeah.
However, you should analyze it. It's not a speculative stock, but it's a very aggressive common stock. And it's much more aggressive than Adobe is in terms of investing. So what I would do is maybe put the amount that you would put in Adobe as a percentage of your portfolio. You'd want to put less so in DocuSign. You understand what I'm saying?
Yeah. I mean, I just think
maybe wait for a pullback to maybe buy a little bit more. But I think, again, over the long period of time, this stock will grow into earnings.
Oh, yeah. So that was my point. My point is long term.
Yes.
When the stock market takes a big hit,
yes,
and it corrects. And when it corrects, it should correct. And Patrick, you don't think it's going to correct a lot. I think we're going to get a good 10%. You don't see the 10%. I do. But
okay.
But if let's just say let's not debate that, my friend, please. But let's say this: if we do get a 10% correct, and DocuSign pull way back, guess who's going to be a big buyer? Yours truly. Because everything I said earlier still holds true. DocuSign is a great company. And there's others who, join in on the chat and everything. Yourself, Miss Jams, even we've all used DocuSign, right? And it's growing share. I mean, it's staying ahead of Adobe. Is not even close. Adobe is, it's less than 10%, so it's fractional compared to DocuSign. But I just think it's really expensive right now. And then if you even look at the return on equity and stuff, I didn't even get into that. You look at return on assets and return on equity as compared to Adobe, man, you could just buy Adobe right here. It's a safer bet. But I didn't even go into those numbers because I didn't want to go there. And then I'm tired of hitting this. I've been hitting this the whole show. But so I would say not right now. Definitely right now when it comes to DocuSign, watch it. Like what you said, Patrick. Who knows? It may continue to run. So if the price of the shares continue to run, you can. But yeah, be cautious.
Yeah, I would buy maybe just a small bit of it.
Yeah,
of your portfolio. And if it runs, it runs. If it doesn't, if it comes back,
right,
then you could buy a little bit more.
And then let me show something here, Patrick. I want to show something in particular. Now profitability when we're talking about this company. So it'll be nice to have, and what we're looking at here is DocuSign. It would be nice for DocuSign to mature a little more, somewhat like Amazon did, because Amazon, in the beginning, it was kind of shaky. It carried a lot of debt. And this company has a tremendous amount of debt too, which we didn't talk about. If one were to look at the balance sheet, which I asked you not to do, Patrick, because I didn't want to bore the audience to tears. But this company is carrying a lot of debt, so we'd like to see them work through that. But look at this. Profitability, minus 9%. Operating margins, minus. Look at return on assets. Return on equity, minus. Come on, man. Come on.
Let me get in there.
I got to bring the bishop on. He got to sing on this, man. Look. So then let me go over to Adobe. So here's Adobe. Let me show you what a solid company looks like. And it's unfair because Adobe's been out for a while, right? This other company is still getting its footing. Profitability. Look at this. Let's blow this up. Profitability, 38%. Operating margins, 35%. Return on equity, 13%. 15 is spectacular and better. They're doing 13%. But look at return, well, that was return on assets. Look at return on equity, 45%. So that's what I'm talking about. When you had an opportunity to invest in a company like this, in this environment, that's where you got to go, my friend. So, for me, just looking at all of that other stuff, Patrick, and all of the hoopla and celebrating and year over year, but you're not looking at the debt. You're not looking at return on assets negative, return on equity negative. PE ratio is 192 times what it earns. Price to book is big. And we're in an inflationary environment where when inflation concerns, everyone goes for the cheaper stocks. They go for stocks that are solid, that's not priced so heavily with a high PE ratio. So, yeah, I think I'm repeating myself. But, yeah, that's what I wanted to say.
Yeah. Okay. So here's what I would say. I think Adobe is an incredible company. However, it's been around for much longer. It's probably got a more diversified product base and client base. It's a more established company. So you would hope that a company like that would have, the metrics that you were talking about, like positive net profit margin, return on assets, return on equity, stuff like that. And it's a great company too. I would just say that, if you're going to look at a company that has an incredible opportunity to grow and really become the leader of its field, take Adobe is a very, very good company to look at.
Yep.
And like I said, don't buy it all at once. Buy just a little bit. If I were to be a buying person, which is a safer bet, Adobe certainly is.
And in this environment, where
of course,
there are inflationary concerns, whether true or not, but just concerns. Why play around? Let's see DocuSign earnings bake out was cheaper. Let's kind of mill through the inflationary concerns, right?
yes.
And in this environment, if you got money, like you're making monthly income, you should be putting away at least 15% of your money every month, paying yourself first, investing before you spend anything.
Yes.
So that monthly, if you're going to put that money to work, put it to work in something like Adobe in this environment, and a little bit into DocuSign. But
exactly.
But when that pullback happens, we know what we'll be doing. We'll be doing a show on DocuSign. Yours truly will be buying DocuSign on the next stock crash. It's incredible company. So,
and I would agree with you 100%.
Yep. So rather than repeat myself again, Patrick, I'm gonna wrap up the show. But that's the Bet Out of Debt show for today. We call the show the Bet Out of Debt show because when you place a trade, it's called placing a bet, and hopefully it's a winning one to keep you out of debt. And like always, keep investing, and we will see you next time. And take care. Have a good Labor Day weekend.